we're here. So I haven't looked at, apart from the occasional glance, I haven't looked at TradingView almost entirely since the last time we jumped on together. So this is going to be quite cool actually, because we can look at it with some fresh eyes and see what we can make of it. And also, I'm going to use this moment together to share with you some updates with what's going on with everything. But I'll do that at the end. So let's just get stuck straight into Bitcoin. As normal, as usual, if you've got anything to show me, any charts, any questions about the course, because it's funny. Like I was having a conversation with a potential future team member, somebody who might be able to help out with marketing and things. And one of the I suppose unusual, interesting situations that I find myself in is that I've spent the last year and a half working, on this wave counting immersion course, and it's like, man, it's such a big course. I don't think I've ever taken an online course. In fact, no, I've never taken an online course that is this big before. All the courses I've ever taken have been much shorter. But maybe you could. I've taken like language courses, and those courses have been very long. But those have all been audio courses. They haven't been like as extensive as this one. And one of the things this marketer was telling me, he was like, yeah, it's hard to sell a long course because people want things now, quick, fast. You speak to like an internet marketer, and they'll say, yeah, people want the magic bullet, right? The magic beans. They want it now, quick, easy, fast. And so they want to write headlines like achieve X with zero effort instantly. So if you were writing a headline like that, like a marketing headline, let's say for wave counting immersion, although you couldn't do it with wave counting immersion, the course is too long. It would be become consistently profitable with no effort overnight or in a week or something, which is obviously a lie. Like, you can't say that because it's literally a lie. It'd be no different than saying, do you have cancer? Drink this drink to be cured instantly. It's like, now if there's a drink like that exists, then that'll be fucking amazing. And that'll be the best headline ever. But as I'm sure you've heard me go on and on and on and on about ever since we've been, working together, that you can't learn to trade in a week. You just can't. Even if you dedicated, you didn't sleep, didn't eat, if that was possible to live and sustain yourself, and you just traded and learned trading, you can't. It's like, can you learn Russian in a week? Can you learn piano? Can you learn violin in a week? No, you can't. Now, that sounds obvious, but I didn't set out when I was creating wave counting immersion, and this is maybe to my detriment, I suppose, but I wasn't thinking in terms of what's going to be the easiest thing to sell. There would be, it would have been, in that case, it would have been a much shorter course, or maybe I would have broken it down into lots of different courses. That might have been a better route to take from a business perspective. But I just wanted to create like one course to rule them all, right? But like the idea of having a process that you can take someone through, where you come in at the very beginning as a complete beginner. Like, imagine like a factory or a conveyor belt. And they can come in from one side, a complete beginner, and then just go through this process and come out the other side able to make money in the markets. I mean, that's what an incredible transformation. So, as I suppose like an inventor's soul, I wanted to have that factory, that conveyor line where you come in this side and you come out this side and your life is changed. Because your life isn't changed, then it's like, what's the point? Like, what would the headline say if your life wasn't changed at the end of the course? What would the headline say? Learn some things in this much time, and like, whatever, who cares? Learn some stuff. Like, how boring. That's not exciting at all. But trading is something that what an amazing skill to develop. It's worth the time, and clearly you agree, otherwise you wouldn't be here. But it takes time, and most people and not you guys, because you guys are here with me, but most people don't want to do hard things. They especially don't want to do hard things that take a long time, right? I suppose, working out in the gym is hard, but you work out for an hour, 45 minutes, something like that, and then the hard work's done and you go back to your life. But I mean, yeah, you can do this kind of stuff like an hour every day, for example, but you could get a good physique in the gym by going there like twice a week if you didn't want to spend too much time in there. So that's like 2 hours a week, and that's like hard work for a little bit of time and then back to your life. But trading, learning a language, learning instruments, something that just requires is consistent, like again and again and again and again. Most people don't want to do that. And Netflix is right there. It's right there. That TV show you want to watch, the next episode's out, the next series, that movie. I mean, a plethora of amazing computer games. It's all there, or your mates inviting you down the pub. Now, I'm not saying don't have fun, don't enjoy yourself, but I'm just saying life's, life can be very, very comfortable, and it takes willpower, determination, and really, more important than any of those things is you have to have such a powerful yearning for a different future for yourself, like a deep burning desire for that future. Because if your desire for that different future for yourself it burns hard enough, that's where you get the willpower, that's where you get the determination, that's where there's the temptation to do that thing which is fun, comfortable, easy. But because this burning desire, that if you don't if you succumb to that, the feeling of guilt, frustration that builds up in you, knowing that you're not doing what you're which is leading towards your dream, that burning desire can be the thing that gives you everything you need to get to where you want to be. And I think the issue is that most people don't have that. They don't have that burning, yearning, craving for some different future, right? And I think you guys all feel that. Otherwise, you wouldn't be here. Now, look, some people you're lucky, and there's many of you here. You actually really fucking love this. You really enjoy it. Do you know what I mean? It's maybe the gym analogy is not quite the same. I'm not quite sure what a similar analogy would be. Because yeah, this can be really fun, but when you don't understand stuff, when you're not sure of stuff, that's when it can be quite challenging. And as with all things in life, half the battle is just showing up again and again and again, and just putting the hours in, getting the screen time in, getting in TradingView, looking at charts, doing analysis. And when you're ready, when the time comes, I always recommend simulated trading first. But however long you spend simulating your trading before you eventually start trading live, again, that transition happens quicker or faster for different people. It's not a race. Oh god, I lost my train of thought now. Whatever journey that you are on, however fast it takes, I've lost my train of thought now. I was rambling. Okay, anyway, let's get back to Bitcoin. Thank you for being here. I appreciate you all. And if you've got any, Paul says, done a few quick courses, all a load of crap. Yes, unfortunately, because most people who create courses, either they're not great teachers, or they're kind of what I talked about before. They're thinking, here's the difference between here's the tension between a teacher, and I can consider myself a teacher. I really love teaching. I enjoy teaching. In another dimension, I was in a classroom just literally teaching. It's probably the thing I love the most, right? Teaching something to somebody else, something I'm obviously very, very passionate about. There's a tension between a teacher and a business person, and in order to have a business teaching people online, there has to be a merge of both. The teacher, what he's thinking about is what process do I need to guide somebody through in order that they can consistently go from here to here, right? Whether it's not knowing this to knowing this, not being able to do this to being able to do this. And it's like, how can I break down this subject, topic, skill set, whatever it is, into steps, right? And you've seen how I've built this course. It's like a step by step process, building you up each time. So the teacher wants to make something that is like a factory, like a Tesla factory, where everything's being assembled and it comes out all finished. That's what a teacher wants to do. A business person, I mean, this is like the pure, like extremes. The business person doesn't give a fuck about any of that. The business person, what he's focused on is, what do people want? What do they need? What do they want? And what language will they respond to, so that they believe that you can give them what they want? Now, a pure like cutthroat businessman doesn't actually give a fuck if your thing actually helps them, although a long-term business guy would, because then you repeat business, etc., etc., etc. But there's a kind of a tension there, because the teacher wants to make something that is going to change someone's life. The business person wants to produce something that sells, and most people want things that are fast, easy, quick. And so you'll get an ebook, buy an ebook that teaches you how to trade. Obviously, you come away off the ebook and you don't know how to trade, right? And that's the tension. And you need both, because like otherwise, you'll have the best course in the world and no one buys it, because they don't know the value that's inside it. It's the role of like a marketer to be able to like find ways to let people know that, hey, this is going to solve your problem. This is going to give you what you need. Anyway, sorry, I'm having a bit of a rambling Monday today. So I'm going to pop into TradingView. And again, if anyone has anything to show me, hit me up in the chat. Any charts, any questions, anything at all from the course. How are you guys getting on with the course, by the way? I know there's a lot of people here from they're like, nipping at my heels. You're in House Lions and you're waiting for module 21. I mean, module 21, that's 20 modules we've been through. So do you, for those of you who are at that point, are you going into TradingView regularly? Are you applying everything you've learned from module 1 all the way to module 20? Are you doing your analysis in multiple degrees and constantly testing your like your perception, your wave structure perceptions, and just doing? How's your Kennedy's channeling technique going? I find that so incredibly useful. How is your perception of market geometry? Are you using pitchforks? Are you getting practice with the different types of pitchforks, the regular, the shift, the modified shift, knowing when to use them in different situations? How are your Fibonacci retracements going? Fibonacci extensions, rebellion extension, prophecy extension, all that stuff. How's it all going? Barry says, course so far great, but lost momentum with 2 months of slow. What's slow? Because the momentum, again, this all comes from inside you. Like, this is the thing. Like, I can teach you, well, I know one magic trick. I'm not going to do it here, but I can teach you one magic trick, and it's very quick. It's not very complicated, and it won't take long to teach you it, right? But I'm sure there is some magic tricks out there that require, imagine there's a magic trick that looks amazing, but it takes a whole year of practice every single day. The kind of person who can do that, like, no one else can give that person the motivation to do it. I can try, but at the end of the day, you've got to find that motivation within you. And it's about building this into a habit, right? We all have habits that we have to do. We have to go to work every day. If you work 9 to 5, we have to eat. Brushing our teeth is a habit, because if we don't, people complain that we have stinky breath. Showering is a habit, because otherwise people complain that we smell. So there's habits that we have that we, like, society has kind of like forced us into. Otherwise there's negative consequences. But when there's habits that if you don't do them, there's not really any immediate negative consequences, then this is when you have to this is what discipline is. It's like, this is my goal, this is where I want to get to. What's it going to take to achieve that goal? It's going to require me to be consistent with my practice of what we're doing here. If you wanted to learn a language, you would practice that language every day. If you wanted to learn piano, you would practice piano every day. If you wanted to learn kung fu, you'd practice that. Get really good at it. You'd have to practice that every day. So the motivation comes from that burning desire. It comes from being somewhat of a visionary for your life. Shirley says, a module 16 task now. Love that module. Just need to apply what I'm learning more and get more chart time in. Yeah, that's it, Shirley. It's just about getting the chart time in. Just getting the chart time in. The more chart time you put in, like, look, think back to when, for those of you who are complete beginners when you started, think back to where you were when you first started. You opened TradingView and it was like, whoa, you know, what the hell is this? And now think how much more comfortable you are in TradingView. When you first opened an exchange, depending on how, people who are in different stages of the course, when you first opened a cryptocurrency exchange, how, like, not knowing what the hell was going on, and maybe how comfortable you might feel now. The same thing with edit wave, like, counting your very first edit waves and thinking, how am I going to do this on my own? I know I'm following Andy, but how am I going to do this on my own? And maybe you got to a point where you're like, I can make out that first wave. I've made out an entire impulse, and then I looked at the sub degree, the subwave structure of those impulses, and I could work. Yeah, I could see the 5 wave impulses of each of the impulses, waves 1, 3, and 5. I could see the corrective structure in the 2 and the 4. Oh my god, I didn't have any help with this. I did it on my own, and it's just about the screen time. It's about practice, and obviously the community that I'm working at building, so that you're not on your own. And you can come as a community and you can share a screenshot of your chart and say, hey guys, look, I can't work this out. I've done these 5 waves, but I'm looking into the 3rd wave and I can't see the impulse structure in that 3rd wave. Can you guys help me out? And then boom, we've got people giving you feedback, and that's what I want to create here. Charlie says, honestly, the only thing I'm struggling with is double combos. I tend to confuse them with 1, 2, 3, 4, 5 impulse waves. Well, double combos are 2 corrections combined together, whereas an impulse wave is a 5-wave structure with the 1st wave, the 3rd wave, and the 5th wave being impulsive. So I'm not, maybe you've got to show me a chart, show me how you're confusing them. But this is what I'm talking about. So I'll finish the comment. Yeah, I never thought making wave counting could be so passionate. I had to force myself the last week to block TradingView and any other website with charts. Well, that's I suppose a good problem to have if you want to keep practicing this. Barry says, still need to pick up speed with starting module. Barry says, still need to pick up speed with starting module 21. No, I can't pick up speed. I'm going at the exact perfect pace that has to be done. But if you've mastered all the modules so far, then fair enough. But that's a lot of modules to have mastered. Paul says, course great, brilliant content, struggle to spread time between everything else in life is my only issue. Yeah, this is why I'm also not learning the piano right now, why I'm not learning Spanish and all these languages. And like, if I had infinite time, then I'd be doing 1,000 more things. But such is life. You have to prioritize. But this is true, and this is something that someone told me. So this is not me lecturing you. There's someone told this to me, and it is true. Whenever you hear yourself say, I don't have time, it's not actually true. It's not actually true. The truth is we give time to things in a hierarchy of their importance to us, So if we don't have time, it's because we are giving time to something else we think is more important than analysis and trading. And if you look at how you allocate your time, you might go, yes, everything I'm allocating my time to is more important than learning how to trade. And that's true, then fair enough. But often we notice that actually we spend this much time on this thing over here, and we go, actually, that's not as important to me, or it's not leading me to goals that I have compared to trading, But it's never that we don't have time. It's just that we have maybe got a bit of a blind spot with how we are allocating the time that we do have. Cool. That's the comments, but there's a few people still typing, so I'll give you guys a few more minutes of Q&A. And then we'll go into Bitcoin and just take a look and see what's going on, because I haven't looked at it. Well, I look at it every day. You can't not look, right? Every day. It's like what Charlie says. But I haven't done any analysis in the last week, so we can look at it together and see what we find. Let me see who's here. We've got Shaman, Shirley, Marcus, Paul, Jan, Theo, Adam, Luke, Tony, Jew, Barry, Jeffrey, Mohammed, and Charlie. Cool. Okay. Well, Jeffrey's still typing, so I'll wait for Jeffrey to finish typing, and then we can get cracking. And then when we're done with Bitcoin, I'll give you guys an update with what's going on. So Jeffrey says, I get several hours daily on several for the last several months and find there is so much I don't know. Cool. That's the window you have to go through. That's the, if you want to get good at something, you're gonna be in that place. It's like the archetype in tarot. The first card of a tarot deck is the Fool, right? And the tarot deck essentially like maps out, almost like, well, depending how kind of hip you want to get, maps out the life path of a soul. And then each of the archetypes is like a state of being almost. And it's not an accident that in the tarot deck, the very first card is the Fool. Anytime you start anything, you start any journey, you will be an idiot. You'll be a fool, like that kid starting class for the first time and you're walking all nervous. You have no idea what the fuck's going on. Anytime you start anything, you will be a fool, a bumbling idiot, right? And the reason and the difference between people who get good at things, who get good at lots of things, and people who don't, are the people who get really good at things and get good at many things is they're willing and eager and totally okay with being a bloody idiot and being a fool, because the Fool is the gateway to excellence. And the people who aren't willing to suffer that to their ego never try new things. They're just stuck. They're stuck, right? But the people who are willing to let their ego fall aside and just look like a fucking idiot, they're the ones who become masters of many things, because at the start of that journey is the Fool, and you've got to be willing to be a fool. And if you can enjoy, like, if you can embrace being an idiot, greatness awaits you, but only to the degree that you're willing to look like a complete fucking idiot. Okay. Charlie's got a chart for me. Andy, I tried to make a brand analysis. Is this chart is not finished yet, but I have two problems. One, there's not enough volume available on the oscillator. As I base my wave count on the RSI, you base your wave count on the RSI. Two, has a similar wave structure like the chart I showed you last week, but this is a Forex chart. All right, let's look at Charlie's charts. And then right. Okay, you guys can't see this. Let me just switch the view here. Right, can you guys see that? Yeah, you can. Okay. So let me just 1 second. I've got to move around these things so I can see. Sorry, guys, this is a bit of a head fuck, but this is just so I can see. There we go. The chat here. So try to make a brand new analysis in this chart. It's not finished yet, but I have two problems. There's not enough volume available on the oscillator. That's not true. I'll show you that in a second. This is relative volume. Relative volume. If you were to zoom into this part here, this would have all the volume you need. Again, you're doing, what is this? Libra, Esterlina. Yeah. Oh, is this like, what is this, a currency? I don't know what this is. If you're, is this for Charlie? I don't know why you keep choosing these insanely obscure tokens, or I don't know what this is. Anyway, there's not enough volume. There is volume. That looks flat, but because this is relative. So if you zoom in here, there'll be all the volume you need. I base my wave count on the RSI. Where have you learned that? I don't know. I've never taught to base wave count on RSI. I just use RSI. I use RSI for looking for momentum, strength, divergence. That's the only thing I use RSI for. Now, there's people out there that use RSI in a myriad of different ways. So I can't comment on those. I can only comment on what I use RSI for, which is looking for momentum divergence. But I mean, unless you mean you've been looking for divergence in the RSI to help you with the wave count. But if you've been doing it in another way, I don't think I've taught that. So and then number 2 has a similar wave structure like the chart I showed you last week, but this is a forex chart. Oh, GBP. Okay, it's a currency. Cool. Okay. Use divergence. All right, cool. Okay, makes sense. So, okay, well, the first thing is that you've got this a fifth wave, but I mean, good luck finding that, this doesn't look impulsive at all. Well, I mean, look, you could have a wave 1, 2, 3. I mean, I can't see maybe there's more volume here. Could that be a fourth wave? I mean, that is a deep fourth wave. And it looks like it breaks that structure there. So, I mean, look, this looks corrective personally. So yeah, but like you kind of implied, you would need to see the volume, and for that, look, let me what is this? Let me copy that. GBP. Sorry guys, I know this is a bit of a head fuck when it looks like this. Oh, that's Photoshop. Trading view. I've got to go back in behind the scenes now. Okay, so this is trading view, and let's go to. So this was the one I've actually kept. This proves I haven't looked in trading view since we jumped on together. This was the last one you were playing with. So let's go back into GBP. Where's GBP? See, I don't trade currencies, so I don't. Is that it? Is it JP? Is it the other way around? Doesn't seem to be loading. The futures. What do I search for? Is that it? There we go. Okay. So what were you looking at? What time frame were you looking at? I've lost your screen now. Where is it? You were looking at the monthly. Okay, so let's go to the monthly. Let's get rid of those indicators. Well, that's as far as that goes. Let's go back to yours. This is FXCM. FXCM. Yeah, no idea. You're gonna have to help me out, Charlie. I don't know what to look for. I don't trade currencies, so I'm pure crypto maximalist. Where's the screen gone? I've lost you guys. Here we go. Yeah, you're gonna have to help me out, Charlie. I don't know where to find your thing. But what I was going to do is I was going to show you that when you've got like a flat volume. It's the same as if you're looking at Bitcoin now and you look back at Bitcoin, you know, before like 2016, the price looks flat. And you go, oh, there's no price. The price wasn't changing. It's like, yes, it was. It's just looking back now relative to the distance price travels in, you know, like, you know, price will move like $1,000 and stuff now. But back when Bitcoin was $1,000, $1,000 move is 100% of its entire value. So, you know, when Bitcoin, you've got like little like $10, $50, $100 moves, which at the time was like this. Now, nothing. It's like a flat line. So when you're looking at volume and you're seeing the same thing, there's volume because the price is moving. That price is from volume. So you need to go back in time and just stretch the indicator out, expand the indicator, and the volume will appear. Cool. Well, that's what I wanted to show you anyway. But I mean, what was your question though? Annual tried to make a brand new analysis. I have two problems. They're not enough volume. Okay, I've solved that for you. And two, has a similar wave structure like the chart I showed you last week. But what's the problem though? What's the question? So anytime you want to show me something, you need to, like the first one, the volume one, I've solved that for you. But what's the specific question? What's the specific question? The specific problem? Like yesterday, not yesterday, last week you couldn't work out, or what was it last week? I think you said something like you couldn't work out the subwave structure of one of the waves, and then I immediately pointed out that the entire wave count was wrong because you were breaking rule 2 of wave counting of any wave principle. So sort of like had to go back and redo your homework. All right, okay. Well, while you're having to think about that, let's just pop into Bitcoin and just take a look. So this is the macro, and apologies for all the craziness. Like, you know, if I was wanting to teach something, or you know, if I had something specific to show you, I'd have these all saved in folders invisible, and then I would like slowly layer it onto the screen and show you. But this is just like what my chart looks like. Let me get rid of no, I think it's okay. It's not too crazy. Just kind of zoom out, just kind of show you what all these lines are. Our main bearish pitchfork was created like this, right? Here's P1, P2, P3, and then price has followed that pitchfork, almost hitting the median line, very, very, very close, and then just following us all the way down, and then price started to move away, and then it blasted through this upper parallel here, and then yeah, we're here, and on a lower degree with this wave. Well, this is the end of the fifth wave, and the way my analysis has this is an A, B, and then this is the C here. In fact, if I get rid of all these, I suppose it might be easier to kind of show you. So my analysis had A, B, and then this is the C here, and yeah, so this final C wave. We've got, I believe this is a shift, right? This is a shift pitchfork in the red, and this is the A and the B. And because it's a shift rather than a modified shift, like one of the things, this wasn't ever like taught specifically by Andrews, but it's something I've just sort of observed, is that when you, in a correction, let me draw it for you, in a correction, what you see a lot, right? What you see all the time is, let's say you've got a correction, you're going, so there's an impulse, and then you've got like a correction like that, and then an impulse down, something like that, right? What you'll find a lot is, first of all, when you've got a regular pitchfork like that, let's get rid of these ones. What will happen a lot is you get a beautiful touch of that median line before moving down, and then on top of that. And this is kind of so beautiful when it happens. On top of that, what you see is this right here, and this is a modified shift, and you get because the modified shift, if I get rid of it, if I move this, the modified shift is a path. It is a channel. Sorry, maybe you've heard me drum on about this all the time, but you know, a modified shift is just a channel. That's all it is. And because corrections tend to channel, you get this beautiful like layover of the regular shift and the modified shift. But when you get not a modified shift, but a regular shift, what color is that? Green. Good. Actually, let's just get rid of all the shiny things. Okay. But when you have a regular shift like this, it's a much less steep angle. And so when price isn't going to reach this median line or the upper parallel of the modified shift, I consider it weakness. Right? I see it as a sign of weakness, right? And it's kind of suggesting, a big move. And it's almost like in this particular instance, the bears are coming in early, right? They're not letting this thing correct upwards all the way, right? It's showing weakness. Or if it's the other way around, it'd be like showing, strength, buyers coming in. But in the trend direction it's going in, the shift pitchfork is a sign of trend weakness, momentum weakness. And so because this C wave, this correction here, A, B, C, the way that I've done it, is showing weakness because it's responding to the shift and not the modified shift. I would have placed the modified shift on here, but I can already see immediately, right, that price is not heading down towards the end of that modified shift. And so whereas with the shift, we can see price ping the upper parallel of the shift. So if price did this, we would see price ping along the top of the shift and not reach the this median line of the regular pitchfork and not reach the upper parallel of the modified shift. And that it signifies weakness. It means that you need to shift from the modified to the shift pitchfork, and then you're anticipating for the correction to end early. And what we have seen is price just started to kind of drift sideways. And if I just get rid of all these, for example, and so the macro analysis hasn't changed in quite a while. We've got the wave 3 down, and this whole thing, according to my analysis, this whole thing is wave 4, correction, and this impulsive structure up, which to me, and I was saying this the last few wavecasts, I've got an ABC running flat correction, or if it goes up even up to here, it'll be an expanding flat, and nothing's changed. And this is what a running flat would look like. And we've already got this pullback here, but whether we get the pull, looking at the macro without going into any detail, whether this third wave is completed and we've got the pullback to the fourth down here early, and then we've got the final move up, which would complete the fourth wave, or this is just a pullback like a fourth wave of the lower degree. We've got one more little push up, which I kind of feel like that's what we're going to see regardless. I kind of feel like we've got this pushback, and because it's kind of it's hit not just this median line, which is it's like just a regular pitchfork here from here, P1, P2, P3. Price, I love this pitchfork, right? Because price came up and came back down, and it just touched this lower parallel perfectly. Came back up, touched it perfectly, hugged it right along the bottom. There was all these different entry points right here, and then came up and just blasted all the way to this this central median line, and also this modified shift pitchfork here. Price is responding to it beautifully. Price came down to the first warning line here, and then it's come up and it's hit the median line. It's blasted through the lower parallel, hit the median line. So we've got these two median lines which price it's found resistance against. And so we've got this pullback now, and again, without looking at the lower time frames, it wouldn't be crazy to think we're going to get one more push up to retest. It's almost like you can see here. This would be like an energy point right there. It's almost like I would kind of expect price to come back up and test that energy point right there. And if this wave count is correct, that's where it would find resistance, and that's where the third wave would complete, and then we get the pullback to the fourth wave. That's my macro wave count, and that hasn't changed so far. If that plays out, then the logical place for the fourth wave to go back to will be this this red line here is called the point of control, and it's the point of control for the previous month, right? It's the months, and it's basically the price level where the previous month that was the highest volume price level. And this is called the virgin point of control, or the naked point of control, where price exited the month period without hitting it again. So it's sort of just left there, price has a tendency to come back to it. So if we are expecting a pullback, that would be the logical place to look for. And it also might coincide with some other geometry we're seeing here. Literally this wave one, wave two, this is the base channel. It's a modified shift, but it's a base channel, right? So the top of this, the upper parallel of this modified shift is the base channel. And if you remember Kennedy's channeling technique, the top of the base channel is a very nice support area for wave four, and also potentially it doubles up as the lower parallel of this modified pitchfork here. So essentially, I would be looking for this area here. This is like the energy crystal right there. Is where I'd be kind of looking for the price to come back to, maybe, perhaps, right? So that's the macro. Let me just pop back in the chat and see if there's any more questions from you guys. Charlie's written some things. My question, it's how can I keep making my wave count where there's no volume? I don't know if I'm doing my wave count right. Clearly need the volume. Yeah, there is volume, Charlie. Look, let me hope you have divergence. Let me create. Okay, so I've made a new pane down below. This is a new section. Okay, so if I go, this is the daily. Okay, and this is on Bitstamp. So we've got. Oh, wrong button. That's fine. In fact, I'm going to go, because you're looking at the monthly. So let's go to the weekly. Actually, no, let's go back to the daily. Here we go. Oh, crap. Okay. So I'm probably not going to find a good example here with Bitcoin, but my point is that when you're looking at something that looks like, look, there's no volume, just grab, hold down, click on the scale and zoom in, and then you'll find the volume. Can you do that? Or if you double click on the indicator, the same thing with the price, double click on the price on the axis, and when you scroll, it automatically adjusts. And so if you've got a flat bar on the volume and you move out, so you move the screen so that the area with all the volume moves out of the screen, the indicator will adjust and all of a sudden come to life, because it's no longer comparing itself to this epic amounts of volume that came later. Let me know how that goes, Charlie. I need to move my OBS divergence back onto the screen. There we go. There we go. Where were we? Let's go back to Charlie. clearly need the volume, and I tried to look for another chart, the same pair, but most of them have lack of data available. By the way, this is my assumption. I'm assuming that there is volume. There has to be volume, but are you telling me that maybe back then the volume wasn't recorded? Because if the volume wasn't recorded somehow, and you've zoomed in and there is literally no volume, well then yeah, then you're right. Then you can't use the volume to help you with your wave count. But that doesn't mean that you still can't perform the wave. Like it's so much easier to do a wave count after the fact. You can see the whole move, right? Okay, well that's the whole move. What's the most logical way that move can be broken down into a wave structure that makes sense? Volume is very, very useful for helping you do that, and it's useful for in the moment helping you kind of get a sense of what this wave that you're currently in is likely, what wave number it likely is, etc., etc., etc. So try that, Charlie. And if there is zero volume recorded, then you just have to do the wave count without the volume. Just remember the simple rules. Just remember the just go back to the basics. Go back to the basics. Corrections tend to channel right within a single channel. Impulses tend to be more dynamic with that's where Kennedy's channeling technique comes in. Wave counting is pardon me, is just mapping crowd psychology onto the price action. Crowds tend to react in ways which are barring manipulation and fundamental forces. They create patterns which can be quite predictable, and that's essentially broken down into impulsive and corrective, and everything's fractal. So every impulse is made up of an impulse structure 1, 2, 3, 4, 5, unless it is there are exceptions to that, ending diagonals, leading diagonals, and corrective structures are either all the different corrections we've looked at, but they tend to channel. So anytime I see a structure that I'm trying to map an impulse structure onto and it's channeling, right, which if you're doing a base channel and you're expecting the third wave to explode out of the top of the base channel and it doesn't, it stays within, chances are it's not an impulse, it's a correction. And I think one of the biggest barriers, blocks, resistances to somebody getting good at this type of analysis is their ability, their willingness to let go of analysis they've spent a long time working on, to let it go. Let it go. Like clinging on to, no, this is an impulse. That's what slows you down. You do your analysis, and then if you, again, it's just like following like lines of logic, right? You're doing your analysis and you come across something like this doesn't work. This doesn't work. I've done an impulse and that third wave is corrective. There's no volume in that third wave. This can't be a third wave. Dropped. Step back. Whether it's starting again or just stepping back and going, okay, well, logically, that can't be the third wave. There's no volume. It's staying within what I've labeled as the base channel. Okay. And this, I think, and whether it's ego, whether it's you are attaching your analysis to your intelligence, your competence, and so if your analysis turns out to you hit a roadblock and it doesn't seem like it's actually reflecting price action, is the resistance to letting it go somehow caused by some identification with your analysis? If your analysis isn't right, then I'm stupid. I'm an idiot. I'm not getting this. I'm never going to be a trader. My dad was right about me. The teachers are always right about me. I'm a loser. I suck. Like all this nonsense, all these stories, like it goes, how deep does it go? Was it the last Wavecast where I told you about that? Was it in Tibet or wherever, where they spend a long time producing a beautiful mandala out of all this different colored sand, and as soon as they've finished producing it, they just wipe it away, and it's a meditation. to not cling, to not hold on. And this is where you have to enjoy the process. Do analysis, enjoy the process, but you've got to think about it not as you trying to find absolute order, because you're trying to find order in chaos. You will never find order in chaos. Instead, think about it more like something more creative, right? Like a dance. You're just learning to find some order, but you're dancing with chaos. And so you're doing your analysis, and you're doing it from the perspective of a investigator, right? Like Columbo, Poirot, Sherlock Holmes. Just like your mindset should be, curious. I wonder if this. I wonder if that. You're just trying things. You're experimenting with things. You're not clinging. You're not. Nothing you make is precious, and nothing can, I suppose, kind of show that more than just doing this. Look, all the stuff I've just drawn, it's just drawings. It's just doodles. It's doodles on a page, right? Stop taking it so seriously. And if price action does something where this whole wave count is wrong, it's gone. It's gone. It doesn't serve me anymore. Now, I wouldn't just delete it. I mean, because some of it might be useful, and there's certain things that might, price action, especially the pitchforks, price action responds to those regardless of the wave count. But hopefully that makes sense. You've got to be willing to disregard what doesn't work immediately and stop trying to force a wave count onto price action. Just listen to the price action. And what will happen is you'll be in that sense of play, of trying things, experimenting with things, and then you will find something that you like. It just clicks. I think price action is doing this. And that's what leads to the trade setups, right? That's what leads to the trade setups. If your analysis was always 100% spot on, you'd be trading like all the time, because there'd be constant trade setups, and a trade setup is a high probability trading opportunity. But because it's impossible to know exactly what's going to happen at all times, and it's impossible unless you're an omniscient God, which you're not, you'll be forever frustrated if you get frustrated every time price action doesn't respond to your analysis. Trading crypto, trading anything is not for you, because that's not what trading is. Trading is using your analysis as a tool to find those trade setups. You're a hunter, right? Going through the jungle, trying to find your way, and then you'll find the trade setups. And when you find them, you strike. But when they're not around, you don't just fire wildly into the jungle. That's my metaphor of the day. So my macro is relatively the same. This could have been the third wave here, and we've got the fourth wave coming down here. But I can kind of see like a 1, 2. This could be a 3, 4, 5. Third wave, fourth wave, fifth wave, and in the this third wave. 1, 2, 3. Maybe that could be the case, or we could still be yet to see another push up here for this this third wave. But also it could be here, and we could be seeing the big, the pullback here. But it might not go all. If that's the case, it might not come down all the way to here. If that is the third wave here, then how would, in fact, okay, little test for you guys. If this is the third wave, and if we go down into the lower time frames, and we go, do you know what, that feels right. This feels like the end of the third wave. It makes sense because we've hit these median lines. What analysis methodology that you've learned would we use, or there's a few we could use, but which one would we use next, do you think, that isn't on the screen at the moment, to get an idea of how far wave 4 might pull back? there's two things I'm thinking of, and I'm going to go in the chat and see if you guys. Marcus says wave 3 retrace. Correct. Well done, Marcus. Now, what else might you consider when you're trying to anticipate how deep wave 4 might retrace wave 3? Who knows the answer to that? What might you want to consider? What might factor into how deep wave 4 retraces? Anybody? Jeffrey says wave 2. And what's it called? Alternation. Correct. Yeah. The law of alternation. Yes, exactly. Well done. So if this is wave 2, it's both sharp and relatively deep. And so if we were to look at the law of alternation to help us anticipate where wave 4 might end, then we would be anticipating that wave 4, in terms of like probability, would be much more likely to be both relatively shallow and to be drawn out quite a bit if this is quite sharp. So this is drawn out a little bit, but it's also could be out here. So let's do a retrace, a Fibonacci retrace. And relatively shallow would be anywhere between, like 38.2 standard, and anything above that, I suppose, would be like relatively shallow. So let's just grab the bottom of that, and that's just assuming that is the third wave there. And I've got all my templates, wave 3 retrace there. Visibility weeks, yeah, it's fine. So we can see like just above there is the 38.2. So I'm going to leave this on the screen here, just there. So because wave 2, according to this wave count, was relatively deep, it was deeper than 61.8. I wouldn't expect this to come down to the 0.5, so I'm going to get rid of the 0.5. So I wouldn't expect it really. I've got this these points here, so it looks good. It looks good for a wave 4. Let's go into the lower time frames to have a look. There, 30 minutes. That's kind of where I like doing things. Let's. Okay. So this is what I haven't looked at. So I added this pitchfork here, which was, when did I do that? That was the three days ago. I put this pitchfork on. That was it. That's all I've done. And price has been following this pitchfork really nicely. And I believe, yeah, this is a modified shift. So the modified shift has been following this really nicely, just kind of bouncing up and down between this sliding parallel and look at this median line, just bounces to hit the median line a bunch of times. And so let me just zoom out just a touch. So on the macro, we just looked at a possibility that this is the end of the third wave already, right? Now, what would my thought process be in terms of, again, we're investigators, right? We're detectives, and we are trying to see, could that be, again, you start with the hypothesis and then you go in and you test the hypothesis. Now, when I'm doing these streams, and this is why I can't wait until we're using the new setup, but this is really jerky for me, and it's because I'm streaming and this laptop is doing the streaming work. So it's kind of annoying because I can't just zip around and I've got to like do things really slowly. But that'll be fixed once the new setup is working, which should be for next Monday, because my friend's arriving in a few days. He's got the new one of these that I need, because this is going to allow me to connect my laptop to my PC, and the PC is going to be doing all the brunt work. So by next Monday, hopefully I'll have a cooler setup. So the first thing I always do is I take away all of the analysis, and I'll get rid of the volume profile stuff as well, and just step back, right? Breathe, step back, don't panic, and go, okay, well, what are we looking at? What are we looking at? Just to kind of get an idea of where we are. Okay, so this climb up here, and then I'll go back and forth between the macro, the micro. So okay, so we've got this impulse here, correction, and obviously this rocket launch we had at the beginning there. That rocket launch is this rocket launch here, correction, rocket launch, corrective structure of some form. And then I'll go back to my webcam and go, okay, look at this, we've got some volume here, and volume here. The most volume has been here, but obviously we have a big volume there as well. And my wave count has this as the third wave of the third wave, and that has the third wave completing there. And then we've got the third wave on my wave count, the third wave of the, where does that complete? Oh, up there. Okay, this has the third wave still being completed. Now this obviously needs to be updated because the fourth wave doesn't end here. So that my wave count, my previous wave count has this as wave 1, 2, 3, and all of this is wave 4. Yeah, I don't think so. That would be an exceptionally wide. Well, actually, I shouldn't use that language. I shouldn't discount it because we haven't. It's not a hypothesis we've tested. It'd be unusual, but that's fine. You can get unusual price action, of course. So I spoke a bit too quick there. But this wave count has wave 3 of 3, and it has an ending expanding diagonal for the wave 5, and we've had the divergence between let me get rid of the moving average. We've got the divergence between the 3 and the 5 here, which is nice. 1, 2, 3, and that'll be the third wave of the fifth. Sorry, let me just pop into the chat, make sure there's no questions. Cool. Okay, back to trading view. I'll do this for another few minutes, guys, because we've been going on quite a bit, and then I'm going to give you guys an update with what's going on, what's happening, and some things I think you guys are going to be really excited about. Well, I hope you are. Things that I think you're going to really enjoy, benefit from, be glad that I'm doing. So I'll share that with you very soon. So okay, let's just get rid of these. These are called volume weighted. Oh, get rid of these. These are anchored VWAPs, anchored volume weighted average. Are there any pitchforks which price is no longer responding to? I mean, this one here, price was responding to beautifully, and I want to keep it because price does seem like, look where it turned around right there. It's turned around right here, so it is still responding to this geometry. But what I might do is just kind of bring it into the background a little bit. Right, just something like that. Just it's not so intense, so I can just kind of get an idea of looking at this. Because I'm looking at the wave count at the moment. In fact, what I might do is bring this to the front, bring it back, and then just what are these ones? Yeah, that was another one. That was another one I really liked as well. That pitchfork. Price responded to that really, really well. Okay, but I'll hide that for now. What other geometry do I want to hide? Because when you're focusing on wave count, the pitchforks that reveal the underlying market geometry are useful. So I'm not saying get rid of them completely, but if you've got too many pitchforks on the screen at once, it can be confusing. So here is I think the blue is the regular, and and this is this is a modified shift and a regular pitchfork for my waves. So that means the waves 1 and 2. This is the base channel I was talking about. This blue one here, right? This dark blue one. Oops, wrong button. Daily. That's the base channel here. But I've added the first warning line, second warning line. You can see price action bouncing between these warning lines, and it changes direction right there on this warning line. So the geometry from this base channel I think is really strong. And then the light blue is the regular pitchfork, and again we've got price action. I mean, this is a sliding parallel, and it's just really, really nice. Like, like support becomes resistance, resistance becomes support. This sliding parallel was resistance, broke through, came back, and it found support on the sliding parallel. Really, really cool to see. And then again, this sliding parallel was resistance all the way up. So, but do I need it right now for this wave count? Well, it's not getting in the way too much, so I'm okay. So this, I believe, had the biggest volume. So here's a curious idea. Here's a curious idea, and it's actually something that it's hard to see here. It's not something that you would it's not obvious here. I mean, as price is unfolding, when you're zoomed in, and when I say zoomed in, you're looking at this, right? You're really, really zoomed in, because this is the 30 minutes, right? So you're zoomed in like this. You're not gonna see it. But when you zoom out, whether it's the daily or the 4 hour, I was like thinking, is this an ending diagonal structure, like an expanding ending diagonal, right? So do we have like a 1, 2, 3, 4, like all the volume is here, right? All the volume's here, third wave. So 1, 2, 3, 4, and this is a fifth wave, 1, 2, 3, 4, 5. Big strong first wave, which is what you get with an ending diagonal. Big strong first wave, second wave, third wave, fourth wave, fifth wave. Is that what we're seeing? Well, let's go down to the lower time frames and see, does that make sense? Now, okay, little test for you guys. What's the subwave structure of an ending diagonal? What's the subwave structure of an ending diagonal? You guys know? Paul says ABC. You mean corrective, right? Luke says 335. No, it still has 5 waves. It still has it's numbered 1, 2, 3, 4, 5 in the sense that it's still in eddy wave principle. It's called a motive wave. Shirley says 53535. Kaz wins the day. Yeah, it's labeled 1, 2, 3, 4, 5, but the impulses are corrective. Now it can be double combos. It doesn't have to be an ABC. Jeffrey says, I believe it can be. Now I know when I was like going deep into this, leading diagonals, and this is why I hate leading diagonals, can be both corrective, like 3, 3, 3, 3, 3, and they can also be 5, 3, 5, 3, 5, as Jeffrey says. But that's leading diagonals. Ending diagonals are corrective. So 3, 3, 3, 3, 3, 3, 3, 3. Now those threes can be ABCs. Those threes can be double combos. But going back into our chart, so if everyone else who said ABC, I assume that's what you meant, right? The subwave structure of the waves 1, 3 and 5 are corrective. So if that's what you meant, then well done. Now, if this is an ending diagonal, we'll look at the start of this. You know, like the reason why I label this as, you know, because I mean, it looks bloody impulsive to me. Now, okay. So could we be looking again? Hypothesis, test. You might have a crazy hypothesis. Fine, test it. Crazy idea. Fine, test it. So the hypothesis I'm testing now that this is an ending diagonal. Well, this looks damn impulsive to me. I don't know about you. You know, I think one of the things I got rid of was, yeah, there's my base channel, right? And originally I had my wave 1, 2, 3, and this was the 4, like coming down to the base channel. We've got this impulse up. So what if this is what we're seeing? What if we're seeing that's an A, a B, and a C, very small c. What would the trib-based Fibonacci be of that? Wait, let me grab it. Where is it? There it is. Boom. Is that it? Oops. Oh, it'd be there, wouldn't it? So we're looking for an AB zigzag extension. Yeah, extension. So see, that's the min level we'd be looking at. So it has fallen short of the Fibonacci. If that was it, yeah. So it's fallen short of the Fibonacci, the trend-based Fibonacci extension that we would, the minimum what we'd expect with a corrective pattern. But if we were to run with that, right, as wave 1, and then where's wave 2? What is that, wave 2? And then a little wave 3, 4, 5. Nah. The reason why I'm saying nah is it kind of messes up the ending diagonal shape, because if this is 1 and this is 2 here, well, now it's kind of angled like an expanding triangle, and that's not the shape of ending diagonals. Ending diagonals move with the trend. If it's an expanding ending diagonal, which is what I was kind of suggesting, it would not be expanding like, you know, like symmetrical. It'd be expanding upwards. And also this third wave would probably be the smallest wave, obviously smaller than the first wave. Yeah, and smaller than the fifth wave. And as you might remember, that breaks the second rule of Elliott wave, that wave 3 cannot be the shortest wave. So the only way that for this to be an ending diagonal, structure-wise, would be for this to be wave 1. Could that be a flat correction wave 2? And then this is wave 3 unfolding still? I mean, maybe. But the problem with that, of course, is we've got an impulse here. We can't get rid of what looks like a really clean impulse. So, okay, well, look, I've labeled this as 1, 2, and third wave ending here. But I wonder if what we actually got was wave 3 ending here, a very shallow wave 4, a very shallow wave 4 in this degree, very quick. And then we got our wave 5, rather anticipating like it's still to come, that's over, right? right there. And then this whole, that would complete, oops. No, that can't be right either. Oh, actually, no, okay, not that. Maybe that's okay. Maybe that's okay. So what if that completes our wave 3 here, and that would make sense for this volume. The most volume here, we've got the most volume in the wave 3 of 3, and the next volume in the 3 of 5 of 3, the 3 of 3. So that means that the highest volume is here and here. That volume-wise, that makes sense. And then, going back to what I just said, where because we had a deep wave 4, I said we would expect a shallow wave 4. Well, what if we've got this 1, 2, 3, 4, 5? So where did I have that? Right there. Is that right? 1, 2, 3. Yeah. So okay, that puts that there. Now I'm not saying again. Hypothesis, test hypothesis. So what if we are in wave 4 of this degree and we're getting this kind of like upwards, sideways corrective structure of a very shallow wave 4? So we've got like A, B, C, X, A, B. So we're getting like, what if we're just getting like, now this is where you need to go down into the details to work out the structure of this. But I've got an A, B, because this to me is, can you see how like the logic I'm following is like it's layered, and whenever, like when you look at the chaos and you're trying to work out what's going on in the chaos, that's not the right approach. If you find yourself in chaos, take a step back. Just take a step back, because you start off with the macro, and then once you understand the macro, go a bit deeper, right? And then once you understand that, go a bit deeper. So you see me kind of like keep stepping back, and the macro here is that this looks like an impulse. This looks like an impulse. And so if you're like doing some sort of wave count where that impulse has to be corrective, no, this looks like an impulse. Okay, now follow the logic of that. If that is an impulse, like that impulse, you got to think about it as like the truth, meaning that's the price talking to you rather than you trying to impose something on the price. The price, like speaking to me, what I'm hearing is impulse. If that is true, what would have to be true in terms of the broader wave count for that to be valid, for that to be true? That's my process. And then from that, you can then derive your hypotheses. Well, this could be a possibility, because if that's an impulse, then there's only a few options. It could be either this, or this. Cool. Let's put those aside. Let's test this one. And then you might come across like, but then there's this part of this that just doesn't work. All right, cool. We'll come back to that. Now let's test this hypothesis. And that's where we got this from, where like that this is a flat correction, because we've got a correction, and then an impulse. This is an impulse. Look at the difference. Correction, impulse, correction, impulse. For this to be an impulse going in the other direction, and I was working out the possibilities. There's only one thing that makes sense at the moment, and that is that we've got an A, a B, and this is a C leg of a correction. That's the only thing. Now, sometimes there's multiple things, but at the moment, that's the only thing that makes sense for me, because I've done, the other possibilities seem far less probable than this. But it starts with the basics. I'm taking away all my analysis, and it's just like, again, the basics, like the layers of complexion. the basics is impulse, correction. Waves can be one of two, impulse or correction. Different types of corrections. Some impulses can be like ending diagonals and but the first, like, I don't know what module I taught that in, right? Impulse, correction. That's the step back. Am I looking at an impulse? Am I looking at a correction? If you can't work that out, then if you go deeper and go trying to do crazy kung fu, you'll just get tied up in knots, right? Correction, impulse, correction, impulse, impulse, right? That's what I'm seeing. That's the macro. And now we can go in and explore further. So if that is the completed wave 3, because before I had this as wave 3 of like wave 5 of 3. Sorry, I had the 3 over here. That could be another hypothesis, but for now, this one's interesting, where we've got this kind of upwards moving correction, and that would mean we're expecting a strong push up, right? A strong push up. Yeah, and it could be a strong, if it does work out that way, and it's kind of hugging the top, because we've got these two bullish median lines, and so we might get price kind of hugging these bullish median lines, and then we could get a push all the way to the top of this upper parallel, and that would mean that for this wave count to be correct, we've now got an expanding flat correction. But we'll see. It's going to be hard to find a long entry with an upwards moving sloping correction. Now, I'm not going to spend more time on this now. There's just not enough time. But if I was to continue this analysis, this wouldn't be the end. I would then, because I haven't really fully explored the hypothesis, right? I would go into this and then explore the subwaves and see, does it make sense for this to be an upwards moving fourth wave correction? And if it makes sense, and I go into the recent time frame, because like, what's going on here, like, well, this looks corrective, right? Originally, I thought this could be a 1, 2, a 3, and obviously then, and this last move upwards here is corrective as well. So we're not seeing a 1, 2, 3, 4, 5, because that last move was I need to go in and look, but I'm pretty sure it's corrective. So I would go in and I would explore that hypothesis, right? I would look at the wave count and explore that hypothesis. And if I came across something that just didn't make sense, then I would look for alternatives. But it's just about following logic based on prior assumptions, not assumptions, prior hypotheses that kind of stack on top of each other. Well, if this is true, let's test to see if this is true. And you perform your test, and you go, well, that seems quite robust. Okay, let's go deeper now. Based on that, that's, you form this kind of like logic structure until you come across something that either doesn't make sense, or price action does something where it topples this layer and this layer, but the underlying layers remain true, right? Nothing's changed with the sort of the macro views. You just go in and rework the more kind of micro analysis. So that's all I'm going to do today for TradingView, because it takes a lot longer to go in and form a new wave count, a new hypothesis, and also I'm talking while doing it. If I was doing this just me, I'd be mumbling to myself like a autistic savant, going 1, 2, A, B, 3, whatever. So yeah. So that, I'm going to unshare my screen and just bring me on camera. So did you guys enjoy that? Does that help you when I go into TradingView like that? Because this is all I do on the Wavecast. I talk for a bit, and then I go into TradingView and just share some ideas. But this is the thing, like, it can take. Shirley says yes, it helps a lot. Cool. It can. Sometimes I'll do one of these Wavecasts, and I'm sort of more updating you with a wave count that I'm seeing, and I'm kind of just walking you through it. But to genuinely go through the process I'm talking about of exploring and testing and hypothesizing, Number one, it's annoying when the screen's so jerky, but that takes time. That's the real brunt work. And so in a quick, half an hour, 45-minute time I might allocate during a wavecast, there's just not enough time.